Hi everyone, hope you are well and welcome to theproctrade.com. It is Tuesday the 29th of July. The month end is rapidly approaching. Let me just get rid of that. There we are. This is the high and medium impact events here on our calendar for today. As you can see, the most significant events are coming up in 30 minutes. Hope you can see that. Stay on my forehead. Far too much skin there, not enough hair, but there we go. Such is life as one ages. So the consumer board, consumer confidence expected to tick up a little bit, interestingly, on the back of the impact of the tariffs. Perhaps haven't really bitten into people's wage packets yet, and businesses just yet. Are they going to be as bad as the doomsters say? Are they going to be as good as Trump suggests? As ever, you know, the devil's in the detail. As we know, the president is a great one for headlines, as he did yesterday in Scotland, where his mother's born. He was playing golf and cheating on the golf course. But anyway, if you believe if that video was obviously correct. But anyway, consumer confidence likely to tick up. But remember, the beginning of the year, this number here, this consumer confidence, and remember, the consumer is key to the US economy. The consumer consumption accounts for like nearly 65, 66% of the US GDP, US economy. It's a feel-good factor. Retail sales is really key in there as well. And so how the consumer is feeling, this sentiment number has declined quite significantly. We were up, I think it was 104, 105 or something at the beginning, the turn of the year, on the back of reduced taxes, Trump euphoria, and all the rest of it. And we're down here at 93 for the June read. In July, as I say, 93, 95.9. It's a sentiment indicator. That they're the ones that have collapsed quite significantly. So it's not really a hard data point. Unlike the JOLTS number, remember, job openings, the churn in the jobs market, how many people have flipped from one job to another, how many openings are still available. We've come down quite significantly from over 9. If I quickly let's scale. Whoops, get rid of that. If I quickly look at this chart here on the Forex Factory calendar, you see the big decline in openings here from the 11, 12 million highs here at during the recovery from the COVID crisis back here in 2022. So openings have been going down, and then we had last month this outlier, or maybe an outlier. We'll see. We spiked back up to the still shy of 8 million, but 7.8 million, so better than expected. We've been worse than expected for the last 3 or 4 months, so it'll be interesting to see what this number looks like later today when it comes in. So 7.51 million is expected for the June read. Remember, it's another month behind from the 7.69 million we got for the May number. So hope you're all well. How are you going? We did a little webinar last night or last night my time, on the marvelous VWAP. Very, very popular, very simple, a volume and price indicator. That's a little bit, the analogy is really to a moving average, but it's not a moving average because it's got volume in it, and it's it's very much an intraday indicator as it comes as default. But you can anchor it, and so you can set it from the beginning of the year or the beginning of the week or the beginning of the month in our TradingView complex. I didn't show that last night, but anyway. So 2 bits of data. Obviously, there's a huge amount of data coming the rest of the week. The Fed meeting starts today. They conclude tomorrow. Lots of inflation reading, GDP from Germany, the Euro area. We've got the private payrolls, ADP tomorrow as well, 77,000 from that big surprise decline last month. The key core PCE price index is also coming out later in the week. We've got the Bank of Canada, we've got the Bank of Japan, all sorts going on this week. Obviously the Fed tomorrow as well. We got the Brazilian interest rate decision, 15% down in Brazil. Good luck, my friends. Thursday obviously marks the end of the month. PMIs from China, it kicks the session off. European data in the morning, more inflation data, more unemployment data. This key core PCE here comes on Thursday, along with the weekly brain's gone to sleep. The weekly claims number, which has been really quite hot, down at 217,000 last month. So watch that Thursday. Thursday is going to be a busy one because it's the end. It's physically and technically the end of the month as well. So I expect a bit of gyration. After the bell on Thursday, we got the Amazon and Apple reporting their earnings. Previously on Wednesday after the bell, it's Meta and Microsoft reporting on Wednesday. So a huge week. 4 of the big 7 reporting earnings. Friday kicks off the new month, August, the relatively benign August, where everything goes particularly, or can go particularly range bound, but plenty of PMI data. Starting a new month as well, see it, more CPI data, and then obviously it's the first Friday of the month. Unusually, it's falling on the first day of the month. We've got non-farm payrolls, round about 100,000, 110,000, 120,000, some are saying. Decline, but that's really not the issue. The issue remains this unemployment rate. If that ticks up to something like 4.5%, we might see some bit of squeeze on the Fed. But tomorrow night's press conference from Mr. Powell will be absolutely interesting to see how quickly he can say nothing, basically, following the statement tomorrow, Wednesday. So the press conference tomorrow, 30 minutes after the statements come out, getting collared from both sides of the aisle, both sides of the political spectrum, about the future path of interest rates in the United States. Still top of the shop, if we see here, the major players, still very much top of the shop here, 4.5%. You compare that to borderline negative interest rates in. Oh, you can't see it. Why can't you see that? Oh no, that's only because I've got. There we are. I was showing you this little chart here. Virtually negative interest rates in Switzerland, and they're still talking about this, and this reluctance or problems that the Japanese have about trying to elevate their interest rates to some sort of a normalized area. They're struggling to do that on the growth of the economy, and the stagnation story. Stagnation story still continues to dominate many of the Asian economies, particularly China as well. So there we go. Where are we? Well, last night we were long the dollar for the first time in a long time across many of our major crosses. Let's start with the euro. We had long on the obviously short euro dollar, long short pound dollar. They've all of them except the yen. I think I posted that they all had, but the yen hasn't actually hit its target yet. It's gone sideways a bit. A dollar against the yen. Yen's a bit holding its own a bit. I'm tweaking my setup a wee bit. Those of you that follow me on Discord, I'm going to take 80% of the profit off at T1 and just leave 20%. Now, I was doing some back testing on the numbers. I don't know. I want to leave some on because when the trend triggers, it can run. So I just want to leave some money on the tables. But I'm going to take 80% off at T1 and leave 20% on going forward, starting in August in full. Just to keep the maths simple. I'm also going to separate out the Forex and the indices, because the indices obviously skew it when I'm reporting numbers. So we'll report Forex separately because that's clear, just pips, and the indexes, obviously the numbers make it look quite big, but percentage wise it's the same gain on any of the assets that I'm taking. The risk level is always the same. That's the key thing, keeping the risk per trade equal every single time we open a trade. So anyway, we were short euro last night here. There's its first target. Similar with sterling, we were short from here, 33.51. We got down to 30. I think we've actually gone through 133. No, we haven't. 133.10. So 40 pips. We got 80% of that off the table. We still got 20% on. The stop loss originally was up here. It's all the way down to the sort of entry level, or just above the entry level now on my trading platform. This is obviously just a demonstration level here. Swissy also hit target. That's target went run through earlier this morning. Again, stop losses come up to our entry level from last night. And the yen, as I was saying, the yen is the one that's actually not gone anywhere. Our I marked it on here for some reason. Our entry was up here, or that's where we are now, I think. Last night, somewhere 148.60 rings a bell from memory. Stop loss was target was 40 pips above there, up here somewhere. Just I think it was just shy of this top of this this recent high we'd had here. So that was still looking quite positive, but obviously hasn't gone anywhere. And stop loss is still down here somewhere, I think, just below that fib level. I think, if I remember, I can't remember the actual numbers, but anyway, the CAD, the Swissy, the Euro, and the Sterling have all hit targets. The other trade we had open last night, I normally do this at the end, but I'm doing it at the beginning for some reason. What we've done, we were long on UK oil, and that's in the money. That's the 4-hour chart. We got in here. Stop loss is down here. Obviously, the numbers are wrong. A target, I don't think it's that high. I think it was just shy of that wick here, because I was using a different actual number. I didn't give you the numbers on the oil because I was using UK spot oil. Ours is on this setup here on the trade locker. It's a different derivative, but anyway, the point was we were long UK oil last night, and that's in the money at the moment. So as you can see, dollars come back on the news, basically. Yes, news over the weekend. Trump met von der Leyen, I should say. Minimum 15% tariffs on European imports. It's better than many Europeans thought, so it was a bit of a sigh of relief. The euro got hit. DAX yesterday, which we were talking about in our webinar yesterday. We were short. We were trading that yesterday as a demonstration, and up on the other platform we had the still a minute to go. Let me load layout. We were using our pivot point set up yesterday on the 5-minute time frame, and we were short that all day yesterday using our VWAP. This is yesterday as we trended down through the VWAP and into the lows, and we closed out here. We were just finishing here the webinar as the European markets, actually the cash markets closed. The two thick blue lines of the cash market opens and close, and the blue lines of the US open and close. So the activity, the big volume of the day is here when US is open and Europe and London is still open. As you can see, the trend had started early in the European Open. We got to an intraday high and we just crashed down. And there's those of you that watched last night, there's a classic example of the way the VWAP works, because it's anchored. It's anchored on a daily basis, so it's realigned itself here on open. On close last night. There you go, when the markets closed and reopened. And so we've been unsurprisingly after the big decline yesterday, we've had a bit of a bounce back today, and we've been above the VWAP. And again, those of you trading this on a 5-minute candle time frame with this Heiken-Ashi setup being positive, short, long, long, short, long, short, long, short now. But you can see there's some resistance there at 24 to 40 area. Anyway, it's different. That's from yesterday. So let's go back to our standard layouts and see what's happening over on the US data. So if we just bring in the euro. So we are short on the 4-hour, short on the daily, because we're still short on that on the higher time frames. The hourly chart is finding a bit of a bottom around our target area here at 115.45. Down, biggest candle was the down one, retraced, didn't get back above it. There we go, more weakness, not as big as the previous one, so engulfing that. So perhaps we're finding some suggestion of a floor, but 115 sits there, and we've been as low as 115.20. So we're coming within 20 pips about 115 today, having breached the key 116 yesterday, which triggered our short position last night. So let's just go back to the our little trading time frame while we're live here. Let me just resize that. So again, there's a low, that duping low lower than the previous low. It's always interesting. We've moved up so far. So resistance is there at 115.50. Big psychological round number. The data is out. Let's have a look at what it showed us. Monday, Tuesday, Wednesday, happy days. ADP, when they've gone too far, it's Tuesday, Monday, Tuesday. Happy days, those who remember happy days. Big decline in, or significant decline in job openings, worse than expected, 7.34 million, expected to be around 7.5 million, so it's a few 100,000 under. Last month was also revised down from 7.769 to 7.1, so what's that, 70 is 69, that's another 50,000 down. Yeah. Interestingly though, we got the converse movement in consumer confidence. So consumer confidence bounced off this low. We're coming at 97 again. So if we look, just quickly go back, so this is our oh, that's the jobs, not the right, that's not the yeah, I don't think we've actually got a no, we haven't actually got a chart for that, but 97. If you open this up, my friend, you can see where we were. So it's 104 here at the beginning of the year, and we've moved down, and the number for June was 93, so that was the low, and we come back at 97 here in for the July consumer confidence number. So mixed data there out of the US. So the sentiment data that's collapsed has started to come back, and the jobs numbers remains very, I mean, it's still quite strong, but the trend has reversed back to that down candles we saw on the Forex Factory chart here. There we go. So we, oops, you can see we've come back a wee bit here. So we're up, but the trend, you know, that may have been that outlier from last month. We'll see again how the data comes. So euro been in to test the 50 period moving average here on the 5-minute candle time frame. So we're still sort of weaker on the day. There we are, sort of weak into open. This morning we recovered a tad. Couldn't get back to 116. We've been a high of 115.87 in the European session this morning, and we've had a low here just as the American cash market is open. So the American traders have been around an hour or two here at 115.20. 115.20 is our low of the day. The main session high is 115.87, so there's a 60 pip range there. Here on the short time, 5-minute time frame, we've gone, technically we would have gone long here at 14.45 on this chart. It has spiked to the 50 period, so you may have had a target up there. To come back to test the 20, so we may loop down. So where we move, literally from where we are now, because that's where the, zoom that in here on the you short-term time frame traders, we've got a flat 20 period moving average. If this breaks, we might look to test the 15.20 again. If this holds, we'll certainly test, or we should test the 15.50 again. If not, we're going to sort of slide sideways into close today, but there's still plenty of data to come. Obviously, the president is on his way back from, I think he's on his way back from Scotland. I think he did his all his talking Sunday and on Monday with Keir Starmer in Scotland, and obviously the next big deal is obviously the Chinese deal. 1st of August is the deadline. Will it be pushed back again? Oh, skepticism. But I mean, now, to be fair to them, there are deals or things he's announced. How detailed these deals are, I remain very, very skeptical, to be honest. Because traditionally these things are watertight, takes months, weeks, takes months if not years. It takes lawyers, it takes diplomats and politicians. Trump's a deal maker, big headline, no interest really in the detail. He wants to grab it and move on. So that's where we sit at the moment. So the weakness. Sorry, my point I'm getting to is if we could take this up to the daily time frame. this weakness we've seen, sorry, the strength we've seen in the dollar, obviously particularly yesterday, is this going to continue? As we said last week, we were very much channel bound for this for July, basically here. You know, the top at 118, the floor at 116. We've breached that yesterday and today. Is this a short-term a movement down? Some would argue. I'm perhaps in that camp, and the dollar weakness might come back. So we'll see. But at the moment, we were short from yesterday. I'd say I've remained 20% of my risk is still out there in the market on euro. Now they're out with the channel, so we could easily, obviously, you know, that could capitulate as well. We could move down quite aggressively into a 115, then 114 if 115 breaks. But yeah, lots depends on the data, what's said. There's nothing really going to change over the August period. We've got the Jackson Hole meeting. Obviously, the inflation data looks like the PCE data, the CPI data is still to come for August and September is still likely to show somewhat benign. But if the impact of tariffs is going to make an impact, it should start to come through in those 2 months. So that's where it's key. And with you know, the yield curve will then dictate where the dollar goes from here. But we've come back quite aggressively and maybe a bit too aggressively, possibly all on one day, all on one Monday at the end of July. So let's see how many deals get done. But it looks like perhaps even the Chinese might put some more flesh on the bones of their agreement they hammered out back in May. So yeah, so euro down, euro dollar down for the fourth consecutive day after yesterday's significant fall. So there we go. So we could see back out, but we are now out of that channel we talked about last week. Similarly, I think it was CAD, wasn't it? We had a channel, and there we are, bursting out of the for a fourth consecutive day higher against the Canadian dollar. 138 remains the big target zone for dollar CAD traders, and we're at 137.70 at the moment, so I'm not too shy of that. Mr. Carney, the Prime Minister in Canada's gone a wee bit quiet over the latest tariff announcements from President Trump. So is he going to Carney this time? Is he going to step back a wee bit? But we're out of that channel as well. As far as dollar CAD traders are concerned, the Swissy, the best performer of them all this year against the dollar. Also similar sort of pattern to the Canadian dollar, having a strong day yesterday, the dollar against the Swissy, and again today. As I said, we got to our first target from last night on the Swissy as well. So we're back above our trend line from the low we identified at the beginning of the month. So that's overall we're up, certainly back up for the month. But again, we'd like to see a break of the 50 period moving average there. I mean, it's been a stronger break than last time. The break of the 20-day moving average. It was 1 day, now we were back under it. We've gone higher again today from last time. Previous time it was up and then back through, but it took a week or so before we were back under the 20-day moving average. So a significant break of the 50 could mark the end of this major decline. But you know, we're still down, retrace, down, retrace. You know, ultimately perhaps down if this holds, but you know, only goes in one direction so long before it turns around. So signs of that happening here on the Swissy as well. Yen, interestingly, has held up against the dollar. So although we're up today and up again for a fourth consecutive day here on the daily time frame, but it's not as positive as the other crosses. So yen holding up a tad. Obviously, it gets to a hugely psychological 150 level, which we haven't managed to get to in this leg higher from the July nadir, the July low we had here at 142.65 on July the 1st itself. So up today, but not as positive as the other crosses for the dollar. Sterling 133.14 again. That's, you know, 4 strong days to the downside. As we were saying last week, it's suffering more as well as the political uncertainty. The weak UK data was another weak data point yesterday and over the weekend for out of the UK. So a big breach of 135 last week, and we continue to move to the downside through 134 yesterday. Our short was here, and we took 50 odd pips out of that at the moment. And down we go again. So the extension of this last fib level will take, or should potentially could take, cable to 132.40. That's the next key line in the sand, and you see that's moving to this level, and then the pivot area, or the pivot, the turn point here at the beginning of May took us under the key 132 level. So 132. 40, then 132, and then the second extension of the fib level takes us back to the hugely psychological 130 level, having just been above 135 for what looked like a strong rally to 138 plus, and to 140 it never happened. So just because it looks like it's going to happen doesn't mean it's going to happen. But 4 days down, and next, I say, target level for cable is 132.42 on a higher time frames. We were short last night. We've taken some cash out of that one. But down we go. Let's look at everything else. Indices have continued to rally. We are at new all-time highs again. This is the daily time frame. Yesterday, intraday here on the Dow. It's the Dow at all-time. Yes, it was as well, wasn't it? Yeah, the Dow and the has also hit. Yep. So all-time highs before we turned around. Yesterday we were down 0.14 of 1% on the Dow. The Nasdaq was up 0.33 of 1% on the back of the expectations of the tech giants reporting positively this week, and the S&P 500 was absolutely flat. It was up a point at 363.89 yesterday. But again, be careful shorting these markets at the moment. There's still some life in them potentially, but you know, they are quite extended valuations on a lot of the stocks. So it's very much a stock pickers market rather than the index itself. But overall, the index continues to move higher. This is always interesting as well when we get an intraday. Let's just sit up. When we get an intraday new all-time high, but then close down for the day. Okay. So it was a down day yesterday, even though we hit a new intraday all-time high over 6,420 yesterday on the S&P 500. So let's say up a tad today at and that trend still, you know, still seems fit. Even the 5-period moving average, 5-day moving average has held really well through this quite strong end of second 3 weeks of July rally from that breach of the 20-day moving average in the middle of June. So strong position to the upside. Still 20-day moving average now at 6,300. The 20-day, 21-day EMA and the 50 is, as we said last week, approaching 6,100, has now breached 6,100 to the upside. And the biggest performer of them all, the Nasdaq, and the Nasdaq 100 in particular, continuing to rally. And again, just, you know, stay calm, stay on your surfboard. That's going to be big. The issue is there could be quite a significant collapse or sell off 5% easily during the August period, September hiatus, if the tariffs start to bite, and they've got to bite somewhere. That somebody's got to pay for this minimum 15% tariff against, not against, but for the US consumer. But then, you know, that's money that's been collected by the US government. Where it goes, it's going to pay for all these tax breaks on predominantly rich people and rich businesses. So how the average American feels about that, you know, they voted for him, so they get what they voted for. So we'll see what happens. But at the moment, the stock markets continue to move higher. Crypto, Bitcoin, today 18,300 or 118,300, still sort of consolidating at these highs, but that divergence we talked about, potential divergence we talked about last week, still in play. So you know, the angle of decline is, in fact, that's actually got less, if anything, hasn't it? On the, there we are. So just watch it. I mean, it remains bid. There's nothing to get too concerned about. I mean, it is a volatile asset, but that's quite a period of congestion sideways. So we could be blowing out, and we could be at 150,000 before we know it. We may go down to test, under 100,000 before we get there. But there's the at the moment it's still well bid. The 20-day now sits at 116,700. And the 50-day is approaching that 112,000 level as well. So nothing to get too concerned about. We've had our leg up consolidation. We may step down. We also may quite comfortably step up as well to the upside. And there's those technical fib levels we talked about around about the 130,000 for Bitcoin to the upside. Oil, as I say, we were long. Funnily, if it untriggered on the UK oil, not on the US oil, but UK oil was long yesterday. There's our target there around 71.20 on our chart here. US oil's trading at 68.25. So the brief break of the 50-day moving average we talked about on Friday was all gobbled up over the on Monday following the OPEC meetings over the announcements over the weekend. So we've got a big engulfing candle taking all of the week plus decline yesterday, and then we've gone higher again today. So still another one that's in a bit of a channel. Listen, I don't want that. I want the channel here for really. That's where we are with US oil. So again, the longer, as we say, the longer that goes on, the bigger the burst can be. Let's just bring that into mid-August at least, into the driving season. US schools will be back, colleges will be back in the US earlier in Europe. So see where if that breaks. But as you can see, we're sort of pushing to the top end of the channel. So 68 plus, and we're currently trading at 68.25. So are we going to have another $70 to the upside at the moment, all sideways on that one as well. And finally, gold trades at 3,318. It's been quite a down move on Friday. Was it Friday or Thursday? I can't remember. Friday. Yeah, it was Friday. We went under the 20-day moving average for the first time in a week or so into the weekend. Yesterday, on the strength of the dollar, we went in to test the key 3,300 level. So it's been tested once for the first time since the beginning of July. We've been back to 3,300 here on the gold chart. Let's bring that down a bit. Let's make that a bit bigger so we can see it a wee bit better. There we are. There we are. Yeah, again, very, very choppy, very messy. But the trend since this top, the 23rd of July, has been to the downside. As I say, we've been under the 20-day moving average only since Friday, but we've had some nice points on the gold short position there as well. But again, buyers clearly around the 3,000 level, but don't be surprised if that 3,300 level gets tested again. As you can see, RSI remains down. Very little action on the MACD, although we have had the significant gap we had from Friday's close to yesterday's open is also into a big bodied candle gap there. So we've definite leg lower that's caused the MACD and the signal line here to cross, and our histograms turned negative yesterday, and again that extended move today. So expect, or you can expect, I would guess, another test of the 3,300 level before that move may cool. Obviously, the previous breach of 3,300 took us on an end of day basis to 3,270, and the low of the that leg down we had there in this is end of June, wasn't it? Yeah, right into the end of the June took us to 3,250, so a whole $50 below where we are, $70 below where we are now. So again, we've got the end of the month coming up later in the week, so watch that 3,300 level. Many will be as well. Obviously, lots of triggers could be used to test that level again. All sorts of data, as I've said at the beginning of the session today. So there we go. Dollar remains it's sort of 3-4 day rally, 4-day rally, 5-day rally. Still looks okay today. Not obviously, we had a massive move yesterday. It was all down to the EU trade deal expectations. They're still talking in Stockholm, the Chinese negotiators and the US negotiators, expectations on some export controls and that raft of earnings data, which is still looking really positive. We've got over nearly 30-odd%, I think, now of companies reporting. Obviously, the 3-4 big behemoths reporting this week in the tech sector will be crucial to where we go from here. So watch this space, and whatever you trade, always manage your risk, my friends. So I'll leave you for today. As ever, if you're not with theproptrade.com, why not? We are clear, we are open, we are transparent, we are the grown-ups in the room, as one of our adverts said this morning. I like that. I like that little script line. So you know, the evaluation phase, as with most prop trading companies, you've got a one-step approach. Those of you in some sort of rush, I don't know why, but most people still take the two-step approach. Obviously, lots of people try this one-phase approach. Obviously, the challenges and the costs vary on the type of investment you want to make. But you know, if you're going to be trading Forex and gold and Bitcoin, that sort of thing, you want to be looking. Again, I can't tell you what to do. I'm not allowed to. But you you need a decent size account. So 25,000, 50,000 account is what the players play with. The pro account, if you consider yourself a pro, you want to be 25, 50,000 account. The targets, they're not unreasonable. They're very clear. The drawdown is very clear. The maximum daily loss, we're very clear on our Discord group. In the rules, we don't want you gambling. We don't want a risk of more than 3% per trade series, or a sort of number position that while it's open. So if you go over more than 3% of your capital risk on one particular trade, whether it's whether it makes 2% or 1%, but in the process of it being open, if it goes greater than 3%, we'd consider that a bit of a gamble. We'd let it go once or twice, but these are the rules for you pro traders. News trading is allowed with the pro account. Obviously, costs a wee bit more. $195 to get you a 25,000 two-step, two-phase pro account. If you're new to the proptrade.com, new 25 gets you a 25% discount for the first time. Gets you $50 off, so it's less than $150 for a $25,000 account, allowing you to trade the news, allowing you a full chance of getting to the funded account. Funded accounts are refunded on the second payout that you get once you've got your funded account and you prove successful. But the beauty of the pro account is you get an extra 10% on the split of the profit share. So 90% of all the profits are yours as opposed to 80%, and you get your refund on your account after the second payment. And then we pay every week on a Friday. Get your claim in by midnight. Is it midnight? I should know that, shouldn't I? By Thursday, I think it's midnight UTC. Somebody should tell me. Sorry about that, boss. And you get paid on the Friday. So miss the cutoff and it'll be the following Friday. But it's 7 days after your account has been funded, and it takes 3 business days typically to get that funded account ready and up and running for you. It's all here in terms and conditions. There's no small print really. It's obviously small print, but there's nothing flaky. There's nothing dodgy in there, my friends. Honestly, we are as open as the day is long. We want you to be successful, because if you're successful, we're successful, and we can grow and be as good as the next guys, honestly. Okay, so take care. I'll see you all tomorrow. Tomorrow is a Wednesday. It's Fed Day. I'll see you much later tomorrow. We'll see you for the announcement at 7 o'clock GMT. Sorry, no, 7 o'clock my time. So it's 1800 hours GMT tomorrow. So in the meantime, I'll leave you with the gold market bouncing off that 3,300 test yesterday, and the euro today 115.35. Well, how we've reacted to the data. There we go. We're up and then back down. So the 50 period moving average we said is held. We haven't since tested the low of the day at 15.20. So the sideways action continues. So they're the two levels we're looking to break, either up or down. We were up, now it's down, and it's just sliding sideways there. MACD here on 5 minutes is relatively positive, but we're certainly capped back at our target level at 115.45. Okay, take care. See you tomorrow. All the very best, everyone. Bye-bye.